Bitcoin is really the first form of money that's ever existed that is also functional as a currency without the need for a central issuer, whether you want to call it a treasury reserve asset or not. Anybody who was deciding to buy some Bitcoin was saving it on their balance sheet to allow the noise to subside of everything else that's going on in the crypto land when it comes to pricing, that the existence of prices at all necessitates a mass convergence on one form of money. It's not like, oh, we're just going to start setting prices in this currency. It's actually that people are first adopting the form of money, and that as enough people have done that, then price in that unit of currency in Bitcoin emerges only as mass adoption occurs. No more than 0.5% of people in the world have any material exposure to Bitcoin. And then if you assume that the people that really understand Bitcoin are some subset of those, that we're likely not at a point yet where 0.1% of the population really has a fundamental grounding in what is happening.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. As always, I'm in the studio with my co-host, co-founder, and CEO of Acropolis, Chase Palmieri. And this week is going to be a very special episode because we are joined by Parker Lewis. I'm very excited for this episode because Parker is someone that I've looked up to for a long time in the Bitcoin space. He was previously at Unchained Capital, one of the early teammates there, and now he's building Zaprite, working on Bitcoin payments. He's also the author of Gradually Then Suddenly, which I've got right here next to me because it's my personal favorite Bitcoin book. I think it's the best 0 to 1 primer, as Marty says, but it's really a great book. Each chapter goes through specific concerns and questions that people have around Bitcoin. So I love buying this and giving this to my friends and family. But without further ado, Parker, welcome to the show.
Well, I appreciate you saying that. Glad that that you find it valuable. Appreciate you sharing it with folks, and excited to record with you guys, and excited for what you guys are working on.
Yeah, thanks again, Parker, for being here. And I know you've spent, Mason just brought up Marty. I was listening back to your pod with him from about 2 months ago. And you said on the pod that you'd recently spent more time thinking through the difference between currency and money. I thought this might be a good place to start. So can you maybe explain how you see that distinction today?
Sure. So really when I got orange pilled and came into Bitcoin, I didn't really have an appreciation for this distinction that is typically made in what I would refer to as more mainstream economic circles around the distinction of money and currency. I came to Bitcoin, understood it as sound money, understood why I'd want to save in it, now understand why I'd want to receive payment in it, and really always associated, despite having an economics degree, with money and currency being two interchangeable words. And the way that I would describe that is thinking about like virtually everyone that's interacted with money, the dollar. If you ask them, is the dollar money or currency, they'd say both. And that's and for most people, that's all anybody's ever known as money. And they would really not understand the question. They'd be like, what's they wouldn't think there's a distinction. They'd think that they're interchangeable. And for people that distinguish Bitcoin as money but not a currency, the same idea wouldn't apply to the dollar because it is currency by their definition, in that it's issued by a central issuer, and it also, any currency is money, but certain money is not currency historically. A corollary to that is that gold was money, but the dollar was currency that was backed by gold, that was convertible into gold. And so traditionally and functionally, for every form of money that it's existed before Bitcoin, there has necessarily, at least in the modern era, needed to be a currency issuer sitting on top of the money. And it's not just fiat dollar bills. It would be when somebody coined gold, it was typically the crown will coin gold, but to make the gold a utility as money or as a currency, that process of coining played an integral part in the money becoming functional. It would set a weight and measure. It would make it widely not necessarily accessible, but accepted that the crown had put their stamp on this coin. I can trust that this is 1 ounce of gold, and they're also enforcing things like counterfeit. So and then if we advance that to the dollar, you had gold sitting in a bank vault, and a dollar note was issued, and there were initially private banks in the United States of wide variety issuing dollar notes, and then it was standardized, and then the Fed was created. But throughout all of those, there was a currency issuer, and there was some commodity money traditionally backing it. The thing that's really different about Bitcoin, in my view, and where I draw this distinction, is that Bitcoin is really the first form of money that's ever existed that is also functional as a currency without the need for a central issuer. And the important thing to note where it becomes non-pedantic is that virtually all of the things historically that a currency issuer has done or performed in the value chain of money is not needed in Bitcoin, because Bitcoin as a network does that. So there's a unit. So there's not a need for a currency issuer to set a unit. All Bitcoin nodes validate what is and isn't Bitcoin, and what is and isn't a valid Bitcoin transaction. So you don't need a central issuer like the Fed to validate bank-to-bank settlements. And not only is the Bitcoin network validating what is and isn't a Bitcoin, the consequence of that is in terms of a valid transaction, it's also enforcing the supply of the currency. And so if you go down, and I think in the article that I wrote, that Bitcoin is money and currency, that there's 5 or 6 different mechanisms within the Bitcoin network. The Bitcoin network does inherently on its own that, in my view, makes obsolete the need for a currency issuer. And the reason why the conversation is even relevant is that there's a lot of work in DC being done on the regulatory framework, and there's certain constituencies, even very friendly and supportive of Bitcoin, that view it as not currency. And in my view, it fundamentally is. It today is being used as such. People are accepting Bitcoin as payment directly without the need for a stablecoin or a fiat dollar sitting on top of it, and that if you put it in a box saying it's not currency, then there are longer term consequences to that.
Okay, yeah, that makes a lot of sense. Thanks for delving into that. One thing that I've been thinking about a lot is, treating Bitcoin as this scarce form of money. If we're approaching what many think is soon to be an age of abundance, whether it's from energy or advancements with AI and robotics, if every human being on Earth has access to all of the material and service desires at cheaper and cheaper costs, thanks to these innovations, in that future, does a scarce form of money, do you think it has more or less value if everyone can cheaply acquire everything they want?
So yeah, my view is that it has more value the more things that you can acquire with it. That you have this scarce asset, and if you think about it on the perspective of, because there's the logical question, why would you want to spend your inherently scarce asset? But on the other side of that, as somebody running a business that's delivering a product, a good or service to the market, the converse of that is, would you want to accept that? If you value its scarcity and you are delivering value to the world, and everyone that's run a business understands how difficult it is to consistently deliver value at a profit, that there's two scenarios. It's you could sell your good or service in fiat and then convert it and hold Bitcoin in your treasury, which I think everyone should do. But then if there were also a route for you to just take that currency, Bitcoin that you ultimately want at the end directly and circumvent the fiat fees, you would want to do that as well. And then when you think about the currency itself, Bitcoin, if, like in many ways, the vast majority of all value transfer that occurs involves today some form of fiat exchange, but fiat is just one good in the market. So if you could accept fiat and then convert it to Bitcoin, but then if Square opens up its payment terminal to Bitcoin and all Square merchants now accept it, that the liquidity for Bitcoin now becomes more diverse. The quality of the money improves. Everyone holding the currency benefits from not just one good being able to be converted dollars, but every other possible good in the market to also be the end liquidity enhances the value of the currency itself, in my view.
Let's touch on that, actually. I know you weren't in Vegas with us last week, but in my opinion, probably the biggest announcement was what you mentioned in Square allowing their sellers to convert a portion of their proceeds into Bitcoin. I'm curious your thoughts on this. Do you think it's the most important announcement from last week? And I've always thought that the adoption of Bitcoin payments would be driven by businesses. So I'm curious, from your seat at Zaprite, how do you view this news?
Yeah, in my opinion, and I'd be open to hearing other things that were announced, because I was certainly paying, even though I wasn't there in person, I was paying attention. But like hands down, categorically, the announcement that Square had, I think, changes the game more so than anything else. Because they announced a few things. They had in place this ability for certain Square merchants to convert a percentage of their dollar receipts automatically into Bitcoin. That was a program that I believe, and there might have been certain exceptions, it was typically limited to sole proprietorships. So basically saying, hey, if you own 100% of this business, then we'll allow you to convert. And there was a standard percentage that they would allow them to do that. So they're opening that up to everyone now, or they're going to roll it out. It's not available today, but the plan is to roll it out such that any business could do that. But then more importantly, what they announced is that they're going to enable Bitcoin payments on every terminal. And the way that they are going to do that, and it is highly consequential for a number of reasons. Basically, a Square merchant can opt out of it. They can say, okay, I'm going to go into my terminal and turn off the ability to accept Bitcoin. But two important things. Every Square merchant by default is going to accept Bitcoin. And then by default, so you could go up to any Square merchant and pay in Bitcoin. Now, if that merchant says, no, I do not want this to be made available to my customers, the merchant can turn it off, but it's on by default. And then also by default, the way that Square is approaching this, based on my understanding, is that Bitcoin will be auto-converted to dollars. And then, so basically, they're saying every merchant by default is going to accept Bitcoin, but they're going to receive dollars. And then if any merchant wants to change that default setting to convert, to leave it in Bitcoin, then they can. So in that world, and the way that they framed it was, no merchant's going to miss a sale. And if you're thinking like, well, if somebody wants to pay me in Bitcoin, but I get the dollars, do I really want to take away the choice? And Square's basically made the forward decision to say, you can take away the choice, but you need to take it away because we're just going to deliver you dollars. So if there's no difference to you, why not leave it on? And then the merchants that really value Bitcoin and want to market to Bitcoin holders, they can turn the default conversion off such that when their customers pay them in Bitcoin, they just receive Bitcoin. And Square has 4 million merchants, and there's a wide variety of those merchants. But then the greater consequence, I think, is that it will create a tailwind for everybody working on Bitcoin payments and for the Bitcoin payments ecosystem. Because then all of Square's competitors are going to look and see, hey, Square's accepting Bitcoin. And even if and we can talk about this, that typically when people start accepting Bitcoin payments, they do it knowing that it's going to be a small percentage of sales and that it's going to grow, and they're using it as some, they want the Bitcoin, but then they want to market to Bitcoiners. They want that customer base that has sound money, and that Square now has like in a world that has become commoditized in the fiat payment world, all of their merchants are going to have a massive differentiator versus any other terminal. That all those other terminals do not accept Bitcoin. And so who knows, maybe Stripe then says, we're going to turn on Bitcoin, or maybe Clover says we're going to turn on Bitcoin, or maybe Toast says, okay, I'm feeling the pressure, I need to. That it's a beyond just what it's going to enable for Square and Square merchants and customers of Square merchants, is going to drag, not in a bad way, it's shifted the Overton window because of who they are and the way that they're rolling it out.
Do you know if I'd imagine that for the business owner who's accepting Bitcoin, and let's say they have the option to opt into keeping the Bitcoin they're receiving as payment in Bitcoin, you would almost assume that that would allow them to keep a greater percentage of that transaction because there's not maybe a cost associated with moving it out of the Bitcoin and back into dollars for them. And I wonder if that will become a long-term incentive for business owners who are accepting Bitcoin to keep it in Bitcoin.
So I don't know how they're like, I think in theory what you just described is true, and I would imagine that's the direction that they will head in. I don't know how they're planning to treat it out of the gates. So I don't want to postulate. But I understand the nature of a question of like, hey, if they accept Bitcoin, and because are all the fees going to be the same regardless of the payment currency, or will there be a benefit if they decide not to convert because the transaction actually costs less to effect? And it would be logical to pass on some of that benefit to the customer, to have Square benefit in it in the lower cost as well as the customer. I don't know how they're planning to initially roll it out, but I would expect it would regardless of how it's rolling out, the logical thing would be there'd be shared benefit for those merchants that want to keep the Bitcoin, because they're essentially, or they would be eliminating a lot of the other parties to the fiat transaction as well as risk.
In Gradually Then Suddenly, you frame the journey to understanding Bitcoin as a personal and intellectual odyssey. So for you, Parker, what was the most unexpected mental block you encountered on your own path, and how did overcoming it reshape your perspective on monetary systems?
Sure. Yeah, I'd say a couple things. One, when I was going down the Bitcoin rabbit hole, I first had to go down the gold rabbit hole of understanding why gold had emerged as money. And I always like to say that you don't have to understand gold to understand Bitcoin as money. But when I was going on my journey, I needed to, because I needed to because at the time I was evaluating a gold-backed payments platform, and that's part of what serendipitously connected me with Safety and Amoose, who wrote the Bitcoin Standard, which is a book that I highly recommend. But it was necessary on my path, and I was somebody who did not appreciate, like everyone knows that the gold standard existed. They maybe don't know why. Some people might have heard the famous quote from JP Morgan, the man himself, not the bank, saying that the gold is money and everything else is credit. But one of the things that I struggled with Bitcoin was its digital nature, and I had started to appreciate why gold had emerged as money, and I was struggling with this idea. I was like, well, maybe Bitcoin will sit on top of gold, and it will be the payment rail, and that gold will be the finite, or not finite, but the scarce asset that underlies it. And then I realized that Bitcoin was the scarcity, that it had replicated the foundational property in gold, not the singular property, but relative scarcity of gold combined with other properties is what allowed it to emerge as money, and that Bitcoin had that scarcity inherent in it, and that it can be credibly enforced. So that was one block that I was struggling with, like the the lack of physicality and the importance of physicality with gold. And one of the frameworks that I talk about in the third chapter of the book, Bitcoin is not backed by nothing, is that like when you start to, because a lot of people that have appreciated hard money, even if you don't need to understand gold, struggle with is the fact that Bitcoin is this natively digital. Like, how can something natively digital be finitely scarce? It is, but it's a rabbit hole. And I realized, hey, there were thousands of physical things in the world, maybe millions of physical things in the world. Gold emerged as money, and that it necessarily, almost definitionally, had to be some other reason that it was physical that caused it to emerge money. It had to be these other aggregate set of properties, because everything was physical. But one thing emerged, and humans are rational. And so that it was really the way that I came to understand it. It was physicality that was holding it back, that made it susceptible to trust and centralization and difficult to transact. So that was one. I struggled with the natively digital side of Bitcoin, and that then came to understand that it's solved via the way that it enforces its finite scarcity. The second thing that I struggled with, that was the final unlock, I'd say, was Bitcoin being too expensive. And this was a time when Bitcoin was somewhere between $800 and $1,000, and I was struggling with this idea, and it's hard once Bitcoin becomes intuitive, once it unlocks for you, to go back and be like, oh, that doesn't even make sense. I don't know why I struggle with that so much, but many people do, because because of the unit bias. But the thing I was struggling with rationally was, if Bitcoin is this expensive, how does everybody get it? And then a friend of mine, Will Cole, when we were, he was somebody who helped me understand Bitcoin. He works with me on Zaprite now. He made a comment that was, we were coming off a ski slope, driving out of the parking lot, and he said, realistically, Bitcoin needs to be worth at least $10,000 for it to even be relevant to large institutions. And I don't know if it was what he meant to say, but the way that I heard it, I had this connection that was like, oh, as Bitcoin becomes more valuable, like as it increases in value, as you can send more value around the world with less nominal unit of the currency itself becomes more valuable because it can facilitate more trade. And that it really wasn't a constraint that it had this high sticker price in it, because everyone can opt in. I knew that you could divide Bitcoin into 100 million units, so I knew you could save $20, which I struggled with this idea of it being too expensive. And one of the interesting things that another friend of mine said once was, he's like, one of the coolest things about Bitcoin is that even the last person in the world to adopt it, literally the last person on earth, Bitcoin will store value effectively for them for the reason of its fixed supply. And that is really what is of consequence, that the nominal supply of Bitcoin is less important than it being finitely scarce, and that anybody can opt in, and from that point forward, it will reliably store value into the future for the reason that it can't be debased, and whatever unit of value storing its purchasing power into the future is of greatest consequence. And then pairing that back with the first thing that I mentioned, which was that as more people come to understand this, as more people come to value Bitcoin, understand its monetary properties, and opt in, Bitcoin ultimately gets split up into smaller and smaller pieces owned by more and more people, and more trade can occur, because a larger consensus has emerged that Bitcoin is money and the standard of value going forward. So it was really, on the first side, struggling with the physicality. On the second and final, struggling with it being too expensive, and how does everybody in the world get it, or get a sufficient amount of it, and then realizing that it's really just tied to the amount of value they deliver in the world, and whatever value they convert into Bitcoin will store it going forward, because it can't be debased. Understanding also that it's volatile, but that one I'd already figured out.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days.
Yeah, it's super interesting. What you just made me think about with your friend mentioning that, Bitcoin won't be relevant till it's $10,000 a coin. It made me think about a very similar aha moment, which maybe you can touch on more, is the idea that Bitcoin's price is perhaps the most direct thing ever to quantify in value terms the growing network effect. Like there's almost never been a perfect price associated with a growing network effect. Like you could look at Facebook's stock price as their network effects were growing, but in some ways you could look at Bitcoin's price as the value accruing to the network effect.
Yeah, I agree with that. I view, I don't think it's paradoxically, but it's like price is an output, and Bitcoin might be overvalued or undervalued at any point in time, but over time, it is the single greatest indicator of people's around the world, whether they've come to the conclusion that Bitcoin is viable as a store of value or not. And that typically when people first buy Bitcoin, and regardless of when it was 1,000, 10,000, 100,000, or in the future when it's 1 million, their knowledge is necessarily limited the first time they decide to store a small percentage of their savings in Bitcoin. And then as they go forward from that point in time to the future, their knowledge hardens, and they come, and Bitcoin becomes intuitive as they interact with the network, send a Bitcoin transaction, observe things that happen around the Bitcoin network day to day, pay more attention to headlines, but that really that price and market cap, however you want to think about it, is the signal of the emergent consensus of money. And that if more people weren't adopting it that needed to use their Bitcoin for something, to sell it back to fiat, to buy a home or buy a car, that if its price wasn't going up, then it would represent a decline in adoption, and its price going up signals the reverse, because while there is some small percentage of Bitcoin still trickling out to the market currently, approximately 0.8 of the 19.8 million that exists today, about 0.8% is being created on a 12-month basis. But if adoption did not exceed that, then its price would decline, if net adoption. So I do, it is the single greatest signal. And even for people that are buying it for the first time, they're like, oh, they're opting into Bitcoin when it's $106,000. Price is a signal. Price is a communication of information, even if they don't understand it. And the way I relate that to people is, somebody might have looked at Bitcoin when it rose to 69,000, and then it might have declined to 16,000, and they might have thought, oh, I was right not to start saving in Bitcoin. But then it reemerges, and the market signal that's communicated via prices, Bitcoin didn't die. That when it fell to that level, somebody bought it, and then they kept buying it, and then they kept buying it, and now it's back here at 69,000. Maybe I was wrong. I don't know 100% that I'm wrong, or that I was wrong, but price is communicating a signal to me. And so over time, as that increases, it's only increasing by the necessary consequence that more people are opting in to saving in Bitcoin and less. And so there's a lot of things that are important to the underlying health of the network, but that is the most important, I'd say, the singular most clear output for increased adoption. And then in the future, my view is the dollar price will go away and we'll just be pricing things in Bitcoin. But the dollar is the global unit of account today, and so it's highly relevant as a focused metric to measure the extent of Bitcoin adoption, whether it's increasing or shrinking.
Yeah, as a Bitcoiner, you almost have to hold two separate ideas in your head. One is that, Bitcoin through its programming, through its structure is somewhat inevitable and that this was always the path it was going to go on. But at the same time, that $100,000 Bitcoin is $90,000 more de-risked than a $10,000 Bitcoin.
Yeah. And that on the margin, 10 times more combination of people or wallet share have determined that Bitcoin is a better store of value. And then as enough people follow along and find that out for themselves, then the script flips and everything becomes the volatile thing around Bitcoin.
Right. And so we're talking we're talking around the unit of account. And I'm curious where you, especially working in the payment space, where I see perhaps the most value in denominating in sats, where you see this, conversation going. Obviously, whether we refer to it as Bitcoin or sats is kind of an emergent behavior within the community. It can't be top down dictated, but do you think that there's a benefit to Bitcoiners beginning to lean into sats versus whole coin language?
Not really. I think that the way that I see the world evolving is there was the past where the dollar was a store of value, the thing that held cash on your balance sheet. It was what you affected currency transactions with, what you affected payment with, and then it was your unit of account. It was how you price things. It was how you did your accounting. And enter Bitcoin, and everyone still holds fiat currency on their balance sheet. Everyone still prices in fiat, and everyone still sells in fiat, but a subset of the world starts saving in Bitcoin. So whether you want to call it a treasury reserve asset or not, anybody who was deciding to buy some Bitcoin was saving it on their balance sheet. And then as more people began to save in Bitcoin, people started to want to accept it as payment. And what we're seeing predominantly, at Zaprite, we give people the ability to price things in Bitcoin, but the dollar or any fiat currency is still the unit of account. And there's no sense in running away from that. And so what we typically see, and it's logical, is that the fiat currency is still the pricing unit. So if I'm selling a book, it costs $30, but if you want to pay me in Bitcoin, you can settle in Bitcoin, and then I'm saving in Bitcoin. So there's this progression of a subset of people saving in Bitcoin and fiat to then still pricing in fiat, but accepting Bitcoin as payment. And then the end game, once Bitcoin becomes the stable unit, regardless of what it is, then, I don't want to say and only then, but then is when people will actually start to price things in Bitcoin and be paid in Bitcoin. Where we see things priced in Bitcoin are typically only when there's large amounts, like a large contract, and there's time duration involved. If you're showing up to your grocery store to pay for something, you're at the point of sale, the pricing in Bitcoin doesn't make sense because everyone out in the world, like when you think about the consequence of what a unit of account is, everyone's doing consciously or subconsciously thousands of economic calculations every day. How much does this cost? How much does that cost? How am I spending my time? What am I earning? What is my rent? What do I owe? That it's just this subliminal, like everything of value and relative value is anchored to the unit of account. And so trying to inorganically force, like we're going to price something in some small unit of Bitcoin when all of the customers paying them are not, is a anti-pattern. It's introducing friction. But logically, as we go, that it's like I can price something in dollars and take Bitcoin as payment, and the person paying doesn't have to think about it. They're paying $30 worth of Bitcoin. Great. As more people do that, then the standard emerges of whether it's one sat, or if we call the sat a Bitcoin, doesn't matter. Maybe that's the standard unit in the future where it's the stable thing, but until it's the stable thing, then it doesn't make sense to price it. But even then, Bitcoiners, anybody that's started to see Bitcoin as money and can credibly explain to themselves why the finite supply is credibly enforced and that you're not just relying on someone's opinion or me saying that, you're already starting to shift to a world of Bitcoin being a unit of account. Even if you're not pricing your goods and services in Bitcoin and you're still pricing them in fiat, you're starting to think like, how much does that house cost in Bitcoin? And you might not do that if you're walking into the grocery store to buy a $20 ribeye. But if you're buying a house or you're buying a car and it's $50,000 or $100,000 in the context of a car, or if it's, $1 million, you're starting to think like, is that house worth 10 Bitcoin? So the idea of something being a unit of account also is something that will organically emerge in the market, and it's not something that's just a flash cut. It's happening in the background, consciously or subconsciously, as people are evaluating particularly large purchases, and then that will shift downstream as Bitcoin stabilizes.
Yeah, very good answer. And yet another reason why societies converge on one form of money. And when you go to spend something, whether it's at a restaurant or at a store, you're not going to see tables of different conversions of different currencies. It's all going to converge on one. And anecdotally, even at the Bitcoin conference, when I was buying some Bitcoin stuff and I'm asking, how much is this? They say it's $1. They didn't say it was 1,200 sats. I paid in Bitcoin, but don't even remember, to be frank with you, how much I paid in Bitcoin, but I remember how much I paid in dollars.
Yeah, and one thing that I'll note too is that certain people, like the idea that money converges to one is a really critical one for people to allow the noise to subside of everything else that's going on in the crypto land. I won't go into like the reasons why, but I'll make a point on this when it comes to pricing, that the existence of prices at all necessitates a mass convergence on one form of money. So, and one of the things that I elucidate or mention to people is like, you went up and you saw a price on a board, $1. The idea, like, just for a second, imagine if a grocery store, you go to the butcher counter and there's just the butcher counter, and there's 10 different types of steaks, and then there's 200 cryptocurrencies. Would you see 2,000 prices? Like, you could evaluate, like, hey, in theory, how ridiculous would it look like if there were 2,000 prices up here, and you had to, like, find your steak and go down and find currency, 199, and that's just ridiculous. At a more fundamental level, what I try to connect for people is that just in the world of there's 10 steaks and one costs $10 a pound and one costs 11 and one costs 20, the existence of just the price of the steak requires everyone to have previously converged on dollar as money to then derive and set prices. So the idea itself of people to even contemplate putting their own value, the good or service that they're creating, and pricing it in a currency necessitates some understanding of what other things are worth and what their time is worth, and that prices are actually an output of mass convergence on one form of money. And so it's not like, oh, we're just going to start setting prices in this currency and then everyone's going to start to think of it in those terms. It's actually that people are first adopting the form of money, and that as enough people have done that, then price in that unit of currency in Bitcoin emerges only as mass adoption occurs. It becomes, it's like this idea that you can't have it if you don't understand the value, your own value relative to somebody else's, and that prices are so fundamental. Hayek writes about this in The Use of Knowledge in Society, that if you understand that we couldn't have the concept of price if a wide group of people all delivering value and trading with each other hadn't previously arrived at consensus of what one form of money was, then their ability to transaction and even quantify value wouldn't exist. And so if you can appreciate that is one dilemma that helps allow, well, yeah, there's not going to be 200 different currencies because we wouldn't actually be able to price things and trade if a consensus in money was not previously arrived at.
Yeah, and this is a good argument for why local fiat currencies may stick around a lot longer than most Bitcoiners think. Because if you take the thought experiment to the logical extreme and you say, what would the world look like if there were no more fiat currencies and Bitcoin won and 1 Bitcoin equals 1 Bitcoin? Well, you still need to quantify something as a relative good or service against that Bitcoin. So then you'd have to look at something maybe less clear, less tangible than a dollar price, like barrels of oil, right? But you still need to be able to quantify how much 1 Bitcoin is buying and whether or not the buying power, the purchasing power is going up in goods or services. And, for better or worse, people understand what a dollar or whatever their local currency is, and that these fiat currencies might stick around just for that reason, that you need something relative to measure the appreciation of Bitcoin in.
Yeah, I agree with that. I also think that this shift is going to happen a lot faster than people think. And so, and the reason being is, like, everything that you just described, I completely agree with. That, if I think about, I would say, based on estimate or my own internal, like, looking at different metrics, I would say that no fewer or no more than 0.5% of people in the world have any material exposure to Bitcoin. And then if you assume that the people that really understand Bitcoin are some subset of those, that we're likely not at a point yet where 0.1% of the population really has a fundamental grounding in what is happening here. So the consequence of that is, if you think about a network, a trading economy, and you think about all the potential connections of, me trading with each of you, but then trading potentially, at least potentially, and I don't trade with all 2 million people that live in the Austin metro area, but they're potential trading partners of mine. And obviously the businesses are a subset, but that if 0.1% of people understand Bitcoin, then the consequence of, well, where do two people overlap? A business that's offering a service and a person that has Bitcoin and that are possibly in this world where they would want to transact in Bitcoin. It's a really small number in terms of the density. It's something like 0.01%, if 0.1% actually understand it. And so you would look at that and you'd say, like, well, a lot more people have to understand Bitcoin before we start to see trade in Bitcoin scale in any material way. And I believe that that's also true. But it's also very logically a relatively small percentage of the aggregate population that has to understand Bitcoin before the consensus becomes obvious to everybody. And in a way, I would, like a heuristic I would describe as, hey, if we accept that only 0.1% of people understand Bitcoin, or if we're generous and say 0.5%. And the way that I get to the 0.5 is saying Bitcoin's worth approximately 2 trillion, and there's at minimum 400 trillion of assets in the global financial system. That's 0.5%. And realistically, being precise about it's not important. It's the order of magnitude. And that's where also, our discussion earlier about price and the value of Bitcoin in aggregate is such a singular and important signal, that it's not off by some, multiple of 10. It's not off by an order of magnitude. If it's off by a percentage, 5%, 10%, not a multiple. Well, if that 0.1% grows to 1%, to 2%, to 5%, if Bitcoin adoption increased by 10 times to 20 times, it starts to rival the US dollar as the largest currency system in the world. Right now, depending on what measure you look at, the dollar in its broadest sense of money is somewhere like 24 trillion. If Bitcoin increased by 10 times and has a purchasing power in aggregate of all the people that hold Bitcoin of 20 trillion, or so 10 times to 20 times, it's between 20 trillion and 40 trillion, somewhere in there. Now, it doesn't just overtake the dollar because its market cap touches that point, but point is it's starting to rival. It's the second largest currency de facto. It's like dollar's still like the most widely recognized, most used, but Bitcoin is second, which means that Bitcoin has overcome the euro, the yen, the yuan, everything else. That when you start to get into that territory, somebody looking at Bitcoin and saying, like, enough people had to converge on it as money that the remaining people are left with a dilemma of saying, I either have to deny the reality that sits in front of me, but all these other people have previously rationally arrived at this conclusion, that it becomes like there's this tipping point where it becomes the single exit out of a crowded movie theater and everyone tries to hit it at the same time. And so, like, we don't have to get to a world of 10% Bitcoin adoption before we rapidly monetize. That it's something more like 3% or 5% of the world, because those people are the people that have the greatest access to information, the most wealth to store, the most value to store. They're running businesses. They have the greatest incentive to shift over to not having a currency that's creating problems for them, that's being debased. Then you start thinking about, well, what's the time horizon for Bitcoin adoption to increase by 10 to 20 times? Is it the next decade? I would say, 2 more Bitcoin halving cycles, central banks all over the world printing money. What's more likely, that Bitcoin adoption increases by 10 to 20 times in the next 10 years, or that it doesn't? And so when it does, when it starts to become like the next largest currency to the dollar, and it's not unclear, then that scenario becomes more obvious, and then we can get into a world where enough people have started to value it, enough people that are producing value that can associate the value of Bitcoin to the thing that they produce, and to start conceptualizing the cost of the thing that they produce in Bitcoin terms. Then we can get to a world where Bitcoin starts to not need other currency units. So, or realistically, like, what I would expect in that world is thing to start. You like, in that world, you'd see a price of dollars and a price of Bitcoin. Just like if you go to a lot of European cities, you'll see something, in euros and in dollars, but you won't see it in 20 currencies. You won't see it in 3 currencies. That you would start to see those things, and then there will be a time where people start to price things in Bitcoin, and maybe the prices are fluctuating quite a bit or changing frequently, but then they stabilize. So I think that it's like, yes, like, we need the fiat currencies. Like, they are our basis of relative value and price today, but that can also shift quickly. And if you think about it just rationally, logically, of like Bitcoin increasing by 10 to 20 times, which is not hard to conceive of 2% of the population figuring this out, then it can shift rapidly.
Yeah, maybe said another way, or adding to that, is if you look at Bitcoin's current market cap of about $2 trillion versus the total addressable market that it could be going after, it's very clear that Bitcoin is not expensive today, and that Bitcoin only seems expensive because there's so few of them, right? I think that's one where, when it really clicks with people, it's powerful, because like, Bitcoin seems expensive because there are so few of them. But when you look at it from the market cap perspective, it's clearly still very early. So
Yeah, 100%.
So turning to kind of a different topic here, we heard stablecoins talked about a lot at the conference. I know you weren't there, like Mason said, but I'm curious if you caught Safedean's talk, and if you did, maybe you can speak to how he sees stablecoins being bullish for Bitcoin, and maybe then you can share what you think the result of the US embracing and pushing regulated stablecoins, what the result will be to Bitcoin.
Yeah, stablecoins, very, I'd say, popular subject these days. I saw a funny clip circulating where they cut up all the times that someone mentioned
Yeah.
stablecoin.
Yeah.
It's
I'm
funny.
proud to say that my panel did not mention stablecoins once, guys. Don't worry.
Nice.
I appreciate that. Yeah, I mean, my ultimate view is there are a lot of people that are focusing on stablecoins and talking about the importance of them going forward. At the end of the day, my view of this is they're noise. A stablecoin loses its value with fiat, so it's not actually stable. And if you get into the substance of what it is, it's really just a different method of payment or a different way to transfer dollar value. So it's more akin to the advancement of checks to credit cards and potentially credit cards to stable coins, although there's a if you go down that rabbit hole, there's probably a reason why you still need things like, even if they're virtual, you need some form of credit because in large settlement networks and fulfillment of currency, there's a lot of trust that still needs to be required because the settlement of a cryptographic stablecoin transaction does not happen the same way that a car title transfers or a house title transfers. Anyways, my point is that you can either store value in Bitcoin or you can store value in dollars, or you can choose to store value in the dollar via a stablecoin. The stablecoin and the dollar are trust-based. Bitcoin is trustless. One has a finite supply that you don't have to trust anybody. The other is derivatively being printed by the Federal Reserve. So it doesn't solve any fundamental problem for anybody that's looking to Bitcoin. That's the end state. So then when it comes to the talk that Safe gave, I did watch an extended clip, and it was actually, I found it to be very interesting. The way I looked at it was that the logical conclusion of a stablecoin is nationalization, and it becomes the path to a central bank digital currency. And then Bitcoin becomes more obvious as that happens because the Fed or Treasury do not want to give up control to a private entity that's not them. As whether it's USDC or Tether, as they grow in value in terms of the people that are accessing the dollar via one of these stable coins, it's like the Fed and Treasury and even U.S. Congress has no interest in a private entity that's not one of those two other entities, the Treasury or the Fed, controlling the money. That's just so. When Tether's 144 billion, if it becomes $1 trillion, well, they're going to want to regulate it directly, And then if it in some form or fashion starts to overtake the Fed in terms of size somehow, albeit it's like it almost always has to be a subset because the Fed sets the number of currency units. Then I've always looked at it as the natural conclusion of stablecoins is nationalization, is the path to essential bank digital currency. What Safe put out was a very interesting view, which is a different view, and I think they're not inconsistent with each other. But that if you think about what Tether is, and when and I don't pay too much attention to Tether other than in trying, there's been Tether FUD for 10 years where people tried to say that the Tether doesn't actually have the dollars backing it, and it's just printing units, and it's manipulating the price of Bitcoin. That's been a long-running thing that people that don't want Bitcoin to, don't want to be convinced that Bitcoin is actually finitely scarce and truly decentralized. That's what they harp on with Tether. But now the guy who's the Commerce Secretary or his former company, what's it called? Cantor
Fitzgerald.
Cantor basically is custodying their assets and they're attesting to them. They're a primary dealer, so like Tether is now legitimized. And what Safe put forward anyways is like as Tether grows, what it's doing is it's holding certain dollars in reserve, via a bank, and then it's owning treasuries. And people point to it as saying like, oh, stablecoins are great because they're creating demand for treasuries. One of the things that Safe said was, well, it's really just substituting. Someone was demanding the treasuries. It's just shifting demand. It's not actually creating new demand for treasuries. So like if you think that it's adding incremental like buying pressure, the buying pressure is coming from somewhere. It's replacing the buying pressure. But then the other thing of greater consequence, which you brought up, which I think is a good view, is Tether is holding a certain percentage of their reserves in dollars, a certain percentage in treasuries, a certain percentage in Bitcoin, and then they have some other smaller investments. Like they have some investments in mining. And someone will look at that and they say, oh, they're not fully reserved. And you're like, well, your bank's not fully reserved. Your bank only has 10% dollars. So they're way more reserved than anything you could possibly hold as dollars. But Safe described this scenario with, hey, if they're being paid, say, on T-bills, 4% or 3.5%, they're taking that profit and accumulating Bitcoin. They might just be converting some, par, reserve into Bitcoin. And that as the value of Bitcoin grows, they basically become over-reserved. And that anybody that was worried about the peg breaking down should more realistically be paying attention to the scenario where Tether might actually need to be repriced up to say, the value of Tether is 1.02 and the value of a dollar is 1, because Tether has this more valuable reserve asset, and that as more Bitcoin adoption happens and as its reserves increase in relative value in Bitcoin and Bitcoin-denominated things like mining, but really focusing on just the Bitcoin that it holds, because Tether holds 100,000 Bitcoin, that then the underlying stable unit, it could transition from Tether being a dollar stablecoin to Tether being a Bitcoin. Basically, a currency layer that sits on top of Bitcoin and becomes, part of the way that Bitcoin scales. Now, like that, to me, like that is like, I can see that path. I also anchor back to the first part of our discussion of Bitcoin being money and currency. If I was looking at the position of like, I can either own Bitcoin and I can have a contract that's Bitcoin denominated, or have a contract that's Tether denominated that holds Bitcoin in reserve, the rational person in that world just wants the Bitcoin. You would have to have some other value benefit to introducing some counterparty risk, but his point holds, and there might be ways for them to be able to deliver benefits to people that want to hold their Bitcoin via Tether. Maybe that's a scenario. But his broadest point, I would say, is that if you think that stablecoins help instantiate fiat currencies, you're incorrect. And if you see this playing out, that it's more likely that their reserves just shift to Bitcoin and it becomes a currency layer that sits on top of Bitcoin.
Yeah, nothing stops this train was kind of the TLDR of his talk there. Yeah,
and it is this really interesting dilemma that the Fed or Treasury find themselves in. And I speak of them because they are two different entities, but they are so attached at the hip, and their fates are, to a large extent, at least in the current iteration of the dollar and the Treasury, like Treasury bills or Treasury notes, that the Fed has artificially, I say artificially, they've forced interest rates higher artificially. Realistically, that interest rate is still too low. Like, it's like you're being paid 4% or 5%, and true dollar inflation is higher than it, and your alternative is Bitcoin, increasing by more than the real return on the U.S. Treasury, which is close to zero, or the real return on the U.S. dollar, which is negative. Let's just take the current dilemma. The Fed is functionally anchoring the lower band of the rate wherever it is, somewhere around 4%, right, on the short end. So if Tether holds treasuries, they're getting paid 4%, and then they're using that 4% to buy Bitcoin, to turn their dollars in and say, I don't want to hold these, I'll accumulate more Bitcoin. If the Fed is forced to lower those rates because they can't, the dollar debt system can't sustain them, and they go to zero, well, Tether's benefit for holding treasuries goes down, and it's more logical that they would take those treasuries and sell them and buy Bitcoin. That then forces the interest rate back up. So it's just a really interesting dynamic to see, because it's a pure, like, there are dollars reserves, there's treasury reserves, and there's Bitcoin, and they are optimizing for storing purchasing power. And there's someone that understands Bitcoin very well, and so they have all these treasuries, but as rates get manipulated lower, their incentive to hold declines, but then that buoys the interest rate. And there's so many eyes paying attention to what they're doing that it will have influence over the broader market.
Last couple questions for you, Parker. I'll give them to you at the same time, and then we'll go ahead and wrap it up. This has been such a great conversation, but I'm curious. The first part of the question is, how do you orange pill people differently than you did a decade ago? And then the second part of the question is, you wrote the book, I believe, over 2 years ago at this point. So I'm curious if there's any tipping point or particular scenario that you're waiting on that you think could cause the suddenly moment.
All right. So first, the difference in how I orange pill. So what I would say is, one, not 10 years, because 10 years ago, I was not buying Bitcoin. I did not understand Bitcoin. It was somewhere like 8 years ago, or like 2016, 2017. So I want to be honest there. Don't want stolen valor. Once I started for it to click, I'd say, where everything had kind of fit into place, I would describe, like, when I would create a presentation to talk to people about Bitcoin, I would focus on the what is money question, like, like the history of money, and barter, and the problem of coincidence of wants, and the various different properties of money, and how Bitcoin compares. And that, at least orally, when I was having those discussions, it was just it's a wall of information. If you've ever gone down the Bitcoin rabbit hole and then appreciate the dilemma of those people staring at the problem that can't yet see it, money is a very esoteric dilemma. Like, it feels like a turtle's all the way down problem, even though it isn't. That's what causes people to then say that something has value because we believe it has value, or that, money is a collective hallucination, which it's not. But if you realize that, then starting with the foundations of money, which is a very deep rabbit hole that people have to grapple with, I think on their own time. It's like, in my like, at least, like, sitting down with someone and explaining it, it proved to be very ineffective. And then I just, happened to be going to a meeting. I was, like, driving from Austin to Dallas, and I was meeting with a lot of probably people that you guys are talking to, who are business owners looking at converting a percentage of their treasury to Bitcoin, and just thinking about the strategies. And I was thinking about, like, oh, what am I going to present to these people? I was like, 10, young, I don't know if you're familiar with the Young Presidents Organization, YPO, but it was a YPO group, and I was thinking, I was like, well, I've got this material, that material, this, and I was just thinking of all the ways that I could potentially change it up to be more effective. And I decided, I was like, oh, I've got this one slide where I show all of the money that was printed between March of 2020 and May of 2020. Each week, the amount of dollars that the Fed created. And then side by side, the amount of Bitcoin that was produced each week. And it included the week where the rate of issuance cut in half from 12.5 to 6.25. And the numbers on the Fed side, and I anchored that audience to, at the height of the financial crisis, it was the Fed was creating 85 trillion a month. And in single weeks post the lockdown, they were creating things like 500 billion, like 530 billion, 586 billion, 270 billion each week. And that was really the anchoring point to start with a problem that a lot of people think, like, like, money is a deep esoteric rabbit hole. There's a fundamental thing that people have to, like, there's a chasm people have to cross. That is that question of what is money, to really understand Bitcoin and for it to be intuitive. But that if you can start with a problem of, like, they know that, especially business owners, they know money's being printed. They don't necessarily understand all the mechanisms. And if they look at Bitcoin and they see it as a speculative financial asset, that, and they look at it as a solution in search of a problem. If you anchor it first to their problem, they're printing money. This is the extent of it. This is why they're always going to have to continue, and why it's not an uncertainty. And Bitcoin was purpose built to solve that problem. Now let me help you understand a little bit about that. So that's really what shifted. It's less so the foundations of the history of money, and more so starting with a problem that they're experiencing in their life and relating it to Bitcoin, and then that creating this window of opportunity to see Bitcoin through a different lens than they might see it when it's on the screen at CNBC. So then the second part of the question was,
When suddenly?
I don't put precise dates on it. I think it's in the next 10 years. I kind of go back to, we'll go back over all of the kind of hierarchical logic that I use in terms of, Bitcoin getting to be the largest currency system in the world. But I think sometime in the next 10 years that it's either the largest currency system in the world or the clear and defining second, which de facto makes it fait accompli, and that when the suddenly moment happens, no one will have to ask whether it's happening. And there was a presentation that I gave at BitBlock Boom, which is a great conference in Dallas. People should check it out, either in 2020 or 2021, where if you ever see a currency collapse, and typically the way it's viewed is relative to the US dollar, because the dollar is a global unit of account. But if you go back and look at the Venezuelan bolivar or the Turkish lira or the Argentine peso, any instance of those, there's a moment in time where confidence is lost, and you can see it visually. And it might recover slightly, but it's defined, and that the currency didn't fail at that point in time. It was a cumulative. That was the gradually phase. It's slow decline. The way to think about it is like the slow decline of the cost of food getting more expensive over time. The dollar purchasing less and less and less. It's like it's already done. It's just people are gradually figuring it out. And that when something like 3 to 5% of the population really figures out Bitcoin, the necessary consequence is that the confidence will be lost in the fiat currency. And Bitcoin will be the only form of money that's working, and people won't have to. I'm not saying won't have to, but they really won't have the luxury to evaluate, all of these, logical arguments. It will be currency A is holding value, currency B is not. You need goods and services, and currency A is holding its value relative to goods and services. Which one do you want? Because the consequence is your ability to get the things that you need in the real economy. And just like people don't need to know how the telephone works to use the telephone, they won't need to understand why Bitcoin works. It will be the only thing that's working, and it will be more obvious to them. So I think that when any developed world currency hyperinflates, that the reverse side of that will be rapid monetization of Bitcoin. And it's important to note, though, that those currencies are not going to fail because Bitcoin exists. They were failing on their own because they could be created at no cost, because central banks could create trillions of them with a literal click of a computer button, and that humans, as humans do, adapt, and somebody recognized that was a problem and created Bitcoin to solve it. Just like in the long line of people creating problems or solutions to other problems. So I think it's in the next decade, but I also don't live my life in such a way that like the time period is relevant. It's like I know that that's the end point. So I operate and manage my savings, how I spend my time, knowing the end state, knowing that the timing is relevant, and being able to manage volatility is critical. But predicting a point in time is inherently difficult, and if you're just guided by a really strong foundation of the why behind it, that's the scenario where you survive and thrive best in all weathers. So
Well, there we go, Parker. I think This is one of our longest, if not our longest episode, and glad it was with you. So much signal. If you made it this far and you're still watching, you're still listening, give us a like, give us a rating, give us a follow, a subscription on whichever platform you're watching this or listening to this. Parker, where can they find you and Zaprite on socials?
It's zaprite.com, zaprite.com. I think that there's a very logical order to Bitcoin. If you do not yet understand Bitcoin, pick up a book, listen to these podcasts, start saving in Bitcoin, converting a small amount of fiat. But if you already understand it, or if you're on that journey and well advanced and you've figured out why Bitcoin will store value and that it's tied to its fixed supply and that its fixed supply is credible, that it then becomes very logical to start evaluating accepting Bitcoin as payment. So that's what we help people do. So check us out at zaprite.com. Our Twitter or X handle is Zaprite app, Zaprite app. And then if you're interested in a book, you can find my book, Gradual Then Suddenly, on Saif Dina Moose's website, thesafehouse.com, and safe is spelled SAIF. My book is exclusively there. And then there's other great books on Bitcoin there too. On Twitter, I'm Parker A. Lewis. So you can follow me there. And if you reach out to Zaprite, I'll likely be the one who helps hold your hand. So if you are interested in accepting Bitcoin, please do reach out.
Yeah, check out Parker, check out Zaprite, check out the book. I forgot to mention, it's not only my favorite Bitcoin book to read, but it's my favorite Bitcoin book to look at. It's a beautiful cover. Shout out to Proof of Paint. And yeah, go check it out. Thanks, guys.
Thanks, Parker.
Appreciate you guys.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit AcropolisTreasury.com to learn more or to get in touch with our team.